Good morning. This is Katrina Boyer with Pennsylvania Department of Banking and Securities Midweek Money Matters. And I am so pleased to be joined here today with Gary Iorfito, who is going to be talking about how we can reduce the risk of becoming victims of bank fraud, and also talking about being able to freeze our credit reports and talking about some other things we can do with our credit reports. So without further ado, we are recording today's session. So if you don't consent to being recorded, I just ask that you keep yourself muted until the end of the session. At the end of the session, I'll stop the recording and we will invite you to ask your questions. So Gary, go ahead and take it away.
Hi, well, thank you. Good morning, and thanks, Katrina, for asking me to speak to your group today. And uh, today we're going to talk a little bit about not so much about the types of scams that you can encounter, but steps that you can take to try and reduce the risk of losing your money or having your credit ruined by scamsters, and things that you can watch out for to protect yourself. So before we get into that, I wanted to just briefly mention this study that was conducted by the Consumer Financial Protection Bureau. That is one of the bank regulators, and you can tell by their name, they're charged with protecting consumers in the financial arena. And most people may not know, but banks, and I have to be careful, I use the word banks throughout, but I mean banks, credit unions, and savings and loans. Those types of financial institutions are required to monitor activity of their customers, and if they see something suspicious, they're to report it to their bank regulator and possibly even law enforcement. And they do this on what's called a suspicious activity report. And what the CFPB did, the Consumer Financial Protection Bureau, is they looked at a number of reports that had been filed from 2013 to 2017 that dealt with elder abuse. And some of the findings were kind of scary. From 2013 to 2017, they're showing that filings of these suspicious activity reports, or SARs as we call them, quadrupled. I mean, 4 times as many SARs filed on elder financial abuse. A third of the individuals who lost money were over 80. And if you look at this pie chart here, almost over 50% were 70 and older. So it's really tough on the older population. Adults in the age category 70 to 79 had the highest loss, average loss of over $45,000 to financial scams. Checkings or savings accounts had the highest losses. A couple of things that, again, I don't think people realize, which is kind of distressing, is losses were higher when the older adult knew the suspect. So it could be a family member, friend, or someone that's in there helping out. And it's long term. The abuse typically took place over a 4-month period. So it's not a once and done where I try and do something to make it give me some money, then I move on to the next person. It continues. So some of the things that they discussed were, third party getting access to your social security checks or your pension payments, a credit card, or actually taking over your checking or savings accounts. And what we're going to talk about today are, I said, things that we can watch out for to hopefully make sure this doesn't happen, or if it does, limit your liability. Financial institution employee fraud. And I presented this last night, and I said I probably misnamed this slide. It's really not a financial institution employee. It's someone pretending to be an employee of your institution. And I'm seeing these myself. You get a text or a phone call, someone calling you up and saying, "Oh my goodness, there's something going on with your account. Doesn't look good. We're here to help you. We need to take a look at your account. So just give us your social security number and maybe your PIN number or your account number, and we'll get everything corrected." Your bank is never going to do that. They're never going to call you and ask you for your private information. So if you get such a call, it's a fraud. And then these fraudsters will use this information to access your accounts. So some safety tips I'm trying to always try and hand out to people is one, I really strongly urge people not to use joint accounts unless it's with your spouse. But this happens all the time. Mother wants to put daughter on an account or put a friend on the account to help with their banking. And remember, most of this fraud happens from people that you know. If you give somebody access to your funds and account, you've given them your money. It's as much theirs as it is yours. Doesn't matter who put it in the account. They can spend it as easily as you can. And the other thing I worry about is that they too could fall victim to a scam. So maybe you're very careful, um, but you put somebody on your account that's not as careful as you, and they do something foolish and fall victim to a scamster who takes money out of this joint account. So I always suggest use a power of attorney with someone you trust. I encourage direct deposit of checks. If you're getting a pension or social security check, any type of regular payment, direct deposit eliminates the chance of somebody reaching into your mailbox and taking your checks. Always dispose of your bank statements or any other documents, sensitive documents, by shredding them. I'm doing a much better job of shredding just about everything that has my name on it these days. Bank statements, utility bills, mortgage coupons, whatever. Shred them, just don't throw them away. Don't give your social security number out or any other personal information to anybody. And I've said here over the phone, but I should have expanded that, whether it's over the phone, through a text, through an email that you get saying, there's a problem, go to this site and plug in this information. Never give your social security number out unless you've initiated the call. Don't share your PIN for your debit ATM card with anybody, and don't write it on the card. People still do write their PIN numbers on their cards. And I suggest using a credit card when possible, especially for online purchases. A couple of reasons. As we're going to see later, if somebody steals your credit card, your liability for fraudulent transactions is less. And secondly, if they use a credit card, it's bad enough that there's money on there that's been charged that's not yours, and you have to deal with that. But it's on a credit card. It's just sitting there at the moment. Worse is you may be paying interest on it. But if you use a debit card to make a purchase and somebody steals that information and gets into your account, they're taking money out of your account. So while you're settling up with the bank, you're out that money. And if you didn't realize they took the money out and they took a large chunk out, before you know it, other checks you're writing are going to be bouncing all over the place before you even realize what happened. So I'm trying to get better myself at using a credit card a lot more, especially if I'm online. Review your credit card bank statements promptly upon receipt. As we're going to see, if you do that, you can very possibly limit your liability for unauthorized transactions if you report them to your financial institution quickly. So you want to review them quickly and report them immediately if you see something that doesn't make any sense. Protecting your credit cards and bank statements from third parties. If you have people into your house a lot, maybe a caregiver or somebody who's even taking care of your yard, delivery people, I make sure that my bank statements and credit cards are hidden. I keep them in a back room, in a drawer. I don't leave them on the kitchen counter, kitchen table, where anybody walking in can see them. Snap a picture of them and get into my information. If you're getting your account statements by mail, if they stop coming, that's a big red flag, because somebody else is either stealing them or maybe they've redirected them and they're trying to gain access to your account. So I encourage everybody, in addition to reading your statements regularly, pay attention to when they should be arriving. Worst case, mark your calendar when you should be getting your bank statements. And if they don't show up, call your bank right away. That would bother me if suddenly my bank statements didn't appear. So contact your institution immediately. So I'm going to talk a little bit about liability because I think sometimes people don't realize that a lot of the laws are very friendly towards consumers in protecting you if there's an unauthorized transaction on your account. I mentioned credit card liability earlier. Believe it or not, if there's an unauthorized transaction on your credit card, you're not going to be liable for more than $50 of that charge. And it's even lower if you notify your card issuer before the charges, go over $50. And some credit card issuers even offer zero liability. So if I steal your credit card and I go out and I charge up $1,000 worth of charges, the most you're going to be liable for would be $50. But you must read your statement and you need to contact your credit card company immediately to let them know about those charges. Banking transactions, unauthorized banking transactions, gets a little more confusing because the laws are different depending on how the transaction took place. We're looking at three types: somebody using your ATM or debit card, somebody taking money out of your account electronically without using a card. They get your account number and they're able to pull money out, or using an unauthorized or altered check. So depending on how it occurs will determine how much you may be liable for a particular transaction. So for example, if it's a debit card, there's sort of a three-tier, three levels here of liability. If somebody uses your ATM or debit card and it's without your authority, it's stolen from you or you've lost it, and you notify your institution within 2 business days after learning of the loss or theft of the card, you can be held liable for not more than $50. If you wait longer, more than 2 days after learning of the loss of your card, you can be liable for up to $500. And if you wait until 60 days after you receive your statement that shows these unauthorized transactions, you can be liable for everything over the 61st day. So a couple things here I want to just mention. First of all, again, this is very consumer friendly because it says within 2 business days of learning of the loss or theft of your card, not when the transaction occurred, but when you learned about it. So, for example, I do this unfortunately sometimes. I go to the grocery store. I may go to the grocery store on a Monday, purchase groceries, use my debit card. I may not go back to the store for another 5 or 6 days and won't know that. And then I go and I reach into my wallet and my debit card's gone. Well, usually what I've done is stuck it in a pocket somewhere and forgotten it. But if that's the case, if I do a transaction on Monday, and I don't go out again, say till Thursday, I open up my wallet. Oh my goodness, my card's gone. I learned of that loss on Thursday. I have 2 days from Thursday to notify my institution, 2 business days from Thursday, not from Monday. So, and if I do that, I won't be hit for more than $50. So again, it's very important I always like to make sure my debit card's in my wallet after I come home. I check, make sure it's still there. But again, don't think that it's too late. Like that happened way back on Monday. It's too late. Call your bank, let them know you just learned of the loss of your card, and they should work with you on getting that money back. For other types of electronic transactions, not a debit card, I make an ACH transaction out of your checking account. This is a longer time period. If you notify your bank within 60 days after you got your statement showing the unauthorized transaction, you will not be liable for that unauthorized transaction. If you wait longer, you may have to pay the full amount. So again, it depends. If it's a debit card, it's a tighter limit. If it's a debit card, 2 days to limit yourself to $50. Over 2 days and under 60 days, you can limit it to $500. And over 60 days on a debit card, you could be hit with everything that occurred after 60 days. On an electronic transaction, no debit card, you have 60 days. But I still encourage everybody, read your statement right away, notify immediately. So this is just a summary of what I said. It's kind of like, I thought I'd give you a handy little chart because it is confusing to refer back to if you run into a problem. Checks are a little different story. First of all, if it's a forgery or an altered check, an altered means you write me a check for $50 and I leave your house and I'm able to tinker with it a little bit to make it look like it's 500 and I cash it for 500. So I've taken 500 from you when I should have taken 50. You have a duty to, the statute, the law says, promptly examine your account statements and notify your institution. But then they further define promptly as a year. So if you read just the statute in Pennsylvania, you think you have a year after you get your statement showing that transaction to report it to your bank. However, the law goes on to say that the financial institution has the right to shorten the time period, and they do. So for checks, you may have as little a time as 60 or 30 days to report that. So 30 to 60 days after you get the statement showing the forged or altered check would be the time frame that you have to report it to the bank in order to get reimbursement for that. So I encourage everybody, read your deposit agreement because every bank is different. Although the majority I've seen are 60 days, but you definitely have to read your deposit agreement to learn what your limits are. And another item you have to be careful about is if somebody, say, stole your entire checkbook and they're writing check after check after check, and let's say I've written a dozen checks, if you don't notify your institution within 30 days of receiving the statement that shows the first bad check, you're going to be responsible for all the additional checks that I wrote on your account. They're putting the burden on you to look at your statement, say, well, wait a minute, that's a bad check. I didn't write that quickly so that we can stop this person from writing more checks. And, the thought process is if you're slow to report it to your bank, it's kind of your fault that I keep writing checks on your account because you got the statement. You're the one that could look at it and say, that's a problem. I better call my bank. So again, read your account agreement to learn of your bank's policy and review your statements quick as soon as you get them, and notify your bank immediately if you notice a problem. Don't hesitate to do that. A couple of other little things I thought I would just mention. We have signed up for what this is called informed delivery from the post office, and it takes about 5 minutes to sign up, if that, and you can get a daily email with pictures of your mail and packages that are coming that day. The reason I like that is I can look at that in the morning and know what's coming. So if you see your bank statements on the way and you go get your mail that day and it's not there, or a check is on the way and it's not there, someone may have rifled through your mailbox. So I like using that to keep track of what's coming. And if you're into your cell phone and you have mobile banking apps, or if you have a credit card or a bank that offers them, some of them will deliver you a text or an email when a charge is placed on your card. I know I have one credit card, and every time somebody charges on it, I get a text telling me. Now I want to spend the next, I think about 10 minutes left here to talk about credit reports. A couple of things on how you can, so up to this point, we've been talking about checks, deposits, your money, how to protect it. Now I want to talk about how to make sure people aren't going out and getting credit in your name and how to protect your credit score. Again, you want to check, just like your bank statements, you want to check your credit reports regularly. You want to make sure that the information on that is accurate. That's the best way that you can tell if somebody has opened a fraudulent account in your name, a credit card or a loan. Now, federal law allows you to get one free copy of your credit report from each of the 3 nationwide credit reporting agencies once a year. And this is the official website to go to sign up for that. So if you don't do that, I'd really encourage you to sign up at the annualcreditreport.com and get your free credit reports. You can order one from each of the companies. You can get them at the same time, or you can stagger them throughout the year. So like every 4 months, you'll get a credit report. So it shortens the time frame between time that you can, between credit reports, so you can better track your credit. There's a couple things right now that are out there too, and I don't know how long they're going to last. I mean, the one a year is law, and it's going to be there until, and if Congress ever changes it. Equifax has a special program that'll give you an additional 6 credit reports per year if you create a My Equifax account. So you can get up to 7 from them. And right now, through April of next year, all 3 of them are offering free weekly credit reports. So there's no reason why everybody can't be checking their credit report regularly. In addition to credit report checking, there are these kind of safety valves out there called credit freeze or credit fraud alert. And they intended to do the same thing, which is protect your credit from third parties who shouldn't be gaining access to it. A freeze stops all access to your credit report. So anybody who might be out there trying to open up a new account in your name, when they go to let's say we're going to a car dealer to buy a new car, when they say, oh yeah, use, my name is so-and-so, and they give your name, the car dealer goes to pull your credit report, they won't be able to see it. I mean, it's like a sealed envelope. They can't get to it. They can't see anything unless you, the actual owner of the credit report, lift the freeze to allow them to have access to it. So it will stop anybody trying to use your credit report in their tracks. A fraud alert works a little bit different. What this does is this places a big notice on your credit report that tells any creditor who's trying to pool your credit for you or for a fraudulent party that they have to call you at a number that you've provided to verify that it's really you. So if I'm sitting in a car dealership today trying to get a new car using your credit report, and I give them your name, they're going to pull it and they're going to see it, not like a freeze. They will see the credit report, but on there again will be a big notice saying call. They'll call you and you'll say, well, I'm not sitting in the car dealership right now. That's not me. And that puts an end to any attempts I have of using your credit report to buy a new car. Both a freeze and a fraud alert are free. How do you do this? Well, to freeze your credit, you'll need to contact each credit bureau and give certain personal information. And I believe one of them is going to be your Social Security number. So this will be the one time where it'd be okay to provide it. And again, you've initiated it and you've gone to their website. Make sure you're going to the right website. And I have that information later. To do a fraud alert, you only need to contact one of the 3 credit bureaus. They will contact the others, and all 3 of them will make sure that the fraud alert goes on your credit report. Now, with a freeze, as I mentioned, you'll have to lift the freeze if you want to obtain credit, because it freezes your credit even for you. So when you freeze your credit, the credit bureau will give you either a PIN or a password, and you'll want to keep that safe because you'll need it if you want to lift the freeze. So if you decide you want to go buy a new car and you need to unfreeze your credit, you're going to have to contact your credit bureau, provide the PIN or password, lift the freeze. And you can do that temporarily, and then you go engage in your credit transaction and then put it back in place when you're done. And again, you can lift the freeze and place it again for free. None of this costs you any money. And just a brief description of the fraud alerts. There are 3. The most common that we'll probably all use is a temporary fraud alert. Stays on your credit report for 1 year, and after the year, you can renew it. Anybody can put a temporary fraud alert on their account, and it can be renewed as many times as you wish. Active duty one is very limited. It's just for active duty service members who are on assignment away from home. An extended fraud victim alert can stay on your, sets up a fraud alert for 7 years, but it's only available to identity theft victims. So if you've been an identity theft victim, you'll probably need to provide them with a police report. Lost my train of thought. And in order to get these 7 years, but they all do the same thing. They all work in the same way. The only difference between the temporary and the extended is one is for a year, the other is 7. Other than that, they do the same. They have the same effect. So what's best? Well, a fraud alert is maybe just a little bit easier to work with. You keep access to your credit open. There's no need to lift the alert before applying for credit. All that's required is that a creditor contact you, verify it's you before using your credit report. So if you're the one getting the loan and you're sitting across from the desk of your loan officer, for example, and they pull up your credit and says fraud alert, they're going to pick up the phone. They're going to call you, and you're going to answer the phone while you're sitting there and go, yep, it's really me sitting across from you, and you're good to go. A freeze must be lifted. Now, it's not a big hassle to lift. It's just something you need to remember to do. Otherwise, it may slow you down a little bit in getting your credit. If you walk into the bank and you forgot to lift it, then you're going to have to get your PIN, contact the credit bureau, lift it. It doesn't take long, but it's just a little more work. But if you're not planning on getting a lot of new credit, yeah, it works very well. And the only other item I want to share with you, as I promised, is the contact information for the various credit bureau agencies. These are the websites or phone numbers you would use to both order your credit reports, and you can go in through there to put your credit freeze on or your credit fraud alert. And Katrina, I think I've made it with a minute or two to spare.
Perfect, Gary. Thank you so much for your time. Let me stop today's recording.